All right, investors, welcome back. I'm Dave, and today we're diving deep into a stock that's a staple in many portfolios, but has seen some interesting price action lately. Procter Gamble, ticker PG. Is the recent dip a buying opportunity, or is there more pain ahead? Let's break it down. So, what's the buzz around PG right now? Well, the general sentiment revolves around leadership continuity and a balanced growth strategy. Folks are keeping a close eye on the upcoming CEO transition to Shailesh Jejurikar by early 2026, wondering if it'll inject new energy or just be business as usual. There's also a clear anticipation for more quantitative guidance from P&G, something investors are really hungry for, especially given headlines like those about their Q1 2026 earnings already generating buzz. We're seeing a mix of cautious optimism for a steady performer, but also a demand for clearer financial signposts. For those new to the game, Procter Gamble is basically the powerhouse behind countless products in your home. We're talking Head & Shoulders, Gillette, Crest, Tide, Pampers, you name it. They're a global consumer packaged goods giant operating across beauty, grooming, healthcare, fabric and home care, and baby, feminine, and family care. When it comes to their official forward guidance, management has really emphasized an integrated growth strategy and a smooth CEO transition. They're all about leading the growth of our markets, which sounds great, but frankly, it leaves us wanting a bit more in terms of hard numbers to really sink our teeth into. Now, how do we reconcile that relatively general guidance with what the market is actually doing? It's a bit of a puzzle. We've got a stable company with a clear succession plan, but also a market that's craving specifics and, as we'll see, a stock chart that's showing some weakness. This is where our scenario analysis really shines, helping us map out the possibilities. Let's start with our base case, which we've given a 45% probability. This scenario assumes PG continues its predictable, stable growth. Management's talk of an integrated growth strategy and a smooth leadership transition from John Moeller to Shailesh Jejurikar, taking effect in 2026, mind you, underpins this. We're talking steady performance, typical of a consumer staples giant. For the numbers, we started with their current EPS of $6.85, projected next year's EPS with their average 5-year outlook of 4.61%, which gets us to about $7.16. Then, applying a PE multiple of 22.26, consistent with their stable nature, we land at a fair value of $159.54. Now, why 45%? Well, while the fundamentals are solid, our technical analysis shows PG in a multi-week downtrend. It's currently above immediate support at $146, which prevents a severe downgrade, but those existing headwinds cap the upside in the short term. Moving on to our bull case, which we're assigning a lower 15% probability. This is where P&G really knocks it out of the park. We're talking stronger than expected pricing power, successful innovation, and consumer spending firing on all cylinders, especially in big segments like fabric care and baby care. The new CEO, Shailesh Jejurikar, successfully accelerates market share gains and operational efficiencies, leading to enhanced margins and renewed investor optimism. In this scenario, we project a higher EPS growth of 6.0% from the current $6.85, taking us to $7.26, and we slap on an optimistic PE multiple of 25.0. That brings our bull case fair value to a healthy $181.53. So why only 15% probability? Because, folks, the technical analysis is screaming caution. PG is in a multi-week downtrend and desperately needs to break above significant resistance levels, $157 and $162, to even think about resuming an uptrend. Without strong fundamental catalysts to force that breakout, the technical hurdles make a quick bullish reversal much less likely. And finally, the bear case, which we've weighted at a significant 40% probability. This scenario paints a picture of P&G facing some serious headwinds. Think persistent inflation eating away at consumer purchasing power, leading to more trade downs to private labels. Or maybe the CEO transition, despite the smooth talk, introduces unforeseen challenges, causing a temporary slowdown. Margin compression due to rising input costs that can't be fully offset by pricing would also contribute to underperformance. Here, starting with our $6.85 EPS, we're projecting a conservative growth rate of just 2.0%, well below the 5-year average, due to those market pressures, leading to $6.98. Then, applying a reduced PE multiple of 20.0, reflecting lower confidence, our bear case fair value comes in at $139.74. Why such a high probability? Because the technical analysis, my friends, is strongly supporting this outlook. PG is stuck in a multi-week downtrend channel, struggling to overcome those key resistance levels. While it's still above immediate support at 146 and 142, the prevailing bearish momentum and a lack of a clear bottoming pattern significantly increase the risk of further downside from current levels. All right, let's pull up the chart for Procter Gamble. Here's what I'm seeing. PG is currently stuck in a multi-week downtrend channel. To break out of this funk and resume an uptrend, the stock really needs to get above and stay above some key resistance levels. Those are at $157 and $162. On the flip side, if the selling pressure continues, we've got supports to watch at $146 and $142. So, the chart tells us we're definitely in a challenging spot right now. So, is PG a buy? Based on our deep dive, with a weighted average fair value coming in around $150.36, and considering the strong technical headwinds, I'd have to say not definitively yet. The probabilities heavily lean towards the base in bear cases, especially with PG struggling in a multi-week downtrend. While P&G remains a quality defensive company, the lack of clear numerical guidance from management, combined with the current technical weakness, means patience is key. We need to see that technical breakout above 157 and 162 or a clear reversal pattern before we can confidently declare the bottom is in. Given this analysis, if you're looking to start a position or add to an existing one, I'd be looking for a few things. Our bear case fair value sits around $139.74, which aligns somewhat with the lower end of our technical support zone. So, a dip towards the 142 to 146 support zone might present a more attractive entry, especially if it holds firm. Alternatively, for the more aggressive, a sustained break above 157 and then 162 with conviction could signal a reversal, confirming the shift towards our base or even bull case targets. All right, team, that's our deep dive on P&G. What do you think? Is the bottom in? Let me know in the comments below. If you found this analysis helpful, smash that like button, subscribe to the channel, and hit the notification bell so you don't miss our next episode. Your support keeps this show going. As always, please remember, I'm Dave. I'm just a guy on YouTube, not a financial advisor. This is for entertainment and educational purposes only. Do your own due diligence, consult with a professional, and understand the risks before making any investment decisions. Your capital is at risk.